Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news that with the oil price up over $120 a barrel and the benchmark US Treasury 10-year yield above 3%, the risk that global stagflation pose has risen sharply. But first, the fall away in US mortgage applications picked up speed again last week and are now at a more than 20-year low. And American wholesale inventories rose 21% in April from a year ago, but that rise was less than in March. Part of that rise includes inflation, of course, but as the ratio to sales, the new levels are still relatively low in an historical context. But as we noted yesterday, however, some large retailers are feeling high inventory pain. In China, parts of Shanghai are back in strict lockdown as the new pandemic cases are reported there. And the Reserve Bank of India raised its key repo rate by 50 basis points to 4.9% during its June meeting, after May's surprise 40 basis points off-cycle hike. These moves up are to battle steep inflationary pressures there, running now at 7.8% and rising. And Russia said its inflation rate in May was 17%, marginally less than for April. And Turkey reported May inflation rate of 73% and another rise. In Australia, their Treasury Secretary said in a post-election speech that spending pressures from social programs that were freely promised in the election campaign need to be controlled to manage their inflation risks. And he called for a major crackdown on tax breaks worth billions of dollars for both the wealthy individuals and companies. He said growth will not be enough on its own to tackle their $1 trillion debt levels or build back buffers for the next economic downturn there. And the war in Ukraine has made the global growth outlook far bleaker, even though the world should avoid a bout of 1970s-style stagflation, the OECD said. It slashed its growth forecast and jacked up its inflation estimates. About New Zealand, the OECD said growth here will ease to 3% this year and 2% next year, both results they regard as solid. Inflation here will decline in 2023 but remain high, they report, as firms pass on global commodity price inflation and workers demand higher wages. And demand and capacity for air cargo fell in April globally. It was down about 10% year on year and is still lower than the equivalent 2019 comparison. The retreat in the Asia-Pacific region is greater. The US Treasury 10-year yield will start today up 6 basis points at 3.02%. And the price of gold is up $2 today from this time yesterday, now at $1,854 an ounce. And oil prices are up $3.50 a barrel from this time yesterday, now at just under $121 a barrel in the US, while the international Brent price is now just on $123 a barrel. And the Kiwi dollar will open today lower at just on 64.5 US cents. Against the Australian dollar, we're marginally lower at 89.6 Australian cents, and against the euro, we're lower at 60.2 euro cents. That all means our trade weighted index starts today at just under 71.5. Kia ora, I'm David Chaston, and that was 90 at 9, brought to you by interest.co.nz.